Good morning, good afternoon, good evening. Welcome to our YouTube live stream. Sorry, I was just fixing my collar. Running a little bit late. Head to head, Greece versus Italy for your next tax residency. We know who has the better olive oil. Well, do we? I'm not sure. Who makes the better cars? Yeah, that's a given. I don't think Greece makes a lot of cars. Not sure which country has the better food though. That's a toss up. That's but there will be a clear winner in terms of the flat tax regime. And yes, it's not going to be a close call on this one, folks. There's a clear winner, but again, it may be also based on your own preferences and total global income. Today, we're talking about the flat tax regimes of Greece and Italy. Can you stay a tax resident of Europe with unlimited income and only pay 100,000 euros flat tax per year? For somebody who only makes 100 or 200,000 or 300,000 euros per year, this may not sound like a good deal. But for anyone who's making 500,000 euros, a million, 5 million, 10 million or more per year, paying 100,000 or 200,000 euros flat tax a year would be considered peanuts and a deal. Unedited, uncensored, no special effects, the exposed truth, just like the rest of our videos, okay, on our YouTube channel. Quick introduction. My name is Reza, founder of INGWE, your solution provider for tax residencies and citizenship solutions around the world. We have an active portfolio of more than 20 jurisdictions and services that opens up a world of possibilities for serious professionals, families, and business owners seeking optimized residency and citizenship solutions to allow them to keep more money in their own pockets than rather paying it to the governments, who seem to represent less and less of the actual voters every day. We work both with B2B and B2C partners, meaning we cooperate with financial investment advisors, multifamily offices, real estate firms, and developers, and directly as well with individuals and investors like you. At INGWE, we've successfully helped thousands of investors and professionals since 2018 with overseas investments and programs. Our existing portfolio includes flat tax regimes, zero tax personal income jurisdictions, and tax optimized jurisdictions. Whether you're a consultant, a hedge fund manager, investment banker, crypto trader, or you own your own business, it doesn't matter. Whether you're seeking to diversify your assets, aiming to retire comfortably without paying more to the taxman and enhance your quality of life with positive cash flow, find crypto-friendly tax countries, or perhaps even acquire direct citizenship without moving anywhere, or fast-track residency, whether it's for yourself, your clients, or future generations. We do have a diverse range of options. We're not a typical sales company. Oh no, we educate you, provide you with resources, guide you, and help you weigh all your options based on risk, return, and matching your short, medium, and long-term goals. You can consider us as a custom solution provider. Our global partnerships and multilingual team ensure that no matter where you're coming from or where you're planning to invest, you'll have seamless support and our expertise. And if you have questions, engage with our office by filling out the 60-second intake form or a contact page on our website or the links down below this video. Let's get started. And of course, we're going to get into our questions and comments right after. We're discussing a head-to-head today between Greece's non-dom tax residency regime for the non-EU citizens and Italy's famous flat tax regime. We'll cover the basics first, what the Italian Greek flat tax regimes are about, and then, of course, a head-to-head. Italy's flat tax regime. Of course, Italy doesn't have low taxes for its own citizens and residents who are earning income in Italy. There are national taxes, regional taxes, and even municipal, and you got to compound them all based on a progressive rate. So talk about a lot of taxes. However, applicants who have not had Italian tax residency for the last 9 years, over the last 10 years, fiscal years preceding their application, can be eligible to apply for this flat tax regime of Italy. The authorities have to respond to your request within 90 days of filing, similar to the other programs and regimes in Italy for immigration or anything else like the investor visa for foreigners. So within 90 days, you typically get an answer. This regime, this flat tax regime of Italy, as you may already know, is turning converting to 300,000 euros in 2026. But let's review what the original amount was for the original Italian tax regime, all the regulatory changes and the eligibility criteria costs, so you truly understand how we ended up in 2026 with a 300,000 euro flat tax instead of the original 100,000 in Italy when this program first started. 1,500 individuals applied for this flat tax regime in Italy in 2023 before the amount had doubled to 200,000 in 2024. If anyone had transferred the tax residency to Italy, also called the neo-domicile tax regime, that's the official name, they would have to pay a flat tax of 100,000 every year under global income, no matter how much income they earned. They're allowed to remit their foreign income to Italy without paying additional taxes beyond the flat tax that is part of the program. Of course, if anyone is working inside Italy and earning income not from the global sources, then this would not apply to them and they would not be eligible, or that income would not be eligible. Italy updated its tax regime to 200,000 from the original 100,000 flat fee as of Article 2 of the Law Decree number 113, which was issued in 2024. The applicants had already transferred their tax residency to Italy before this change in 2024 continued to pay the 100,000 flat tax yearly before it was updated to 200,000. The Italian neo-domicile tax regime will also apply to the applicant's foreign investments, so foreign interest, dividends, and capital gains besides income, with the exception of capital gains on qualified participation earned in the first 5 years. This flat tax applies to the wealth tax and real estate and financial investments owned outside of Italy. So you just pay a flat tax and that's it. The beauty of this program is that the applicant is not required to declare their foreign investment on their Italian tax return. So it means the applicant would be exempted from tax monitoring obligations. This is excellent because they won't need to know that 1 year you made 5 million, another year you made 100 million or whatever, or anything in between to question you on why you made less, why you made more 1 year, which you all know most of governments who tax you do care when 1 year you're making more and then a couple of years you're making less, or you were making less and then you're making a lot more. They have questions, right? And they have patterns and they want you to pay more every year from that year onwards, which is horrible. That's why these flat tax regimes are good. You still file your taxes, but you don't need to declare your global income. You just pay the flat tax. In Italy, all they care about is for you to pay the flat tax every year without delays. In addition to the taxpayer, each family member could be subject to a flat tax on non-Italian source income at a fixed amount of 25,000 euros per year, which is also changing to 50,000. Obviously, this depends on certain criteria, which is specific to your family composition, but depends under the tax regime can broadly mean spouse, children, brothers, sisters, parents, parents-in-law, sons, daughters-in-law, and so forth. Once you have opted for the flat tax regime in Italy, the arrangement will remain in place for a maximum of 15 years, unless you wind it up early. And of course, there's no penalties if you give it up after a couple of years, for whatever reason. The arrangement will terminate immediately if you don't pay your flat tax every year, whether it was the 100,000 and then it was the 200,000 or 2026 onwards, the 300,000 euros per year plus your dependents. Okay. As per the annual deadline. Keep in mind that even this flat tax regime, essentially you'll be taxed in Italy only on the Italian source income and capital gains from qualifying equity interests sold within the first 5 years of opting for the flat tax regime. Okay, so that part we discussed. In the second case, just to explain to everyone what that means, capital gains and qualifying equity interest sold in the first 5 years when you become a flat tax regime applicant or approved one, those capital gains could be included in the flat tax regime after you filed your taxes ruling application demonstrating that there has been no abuse of law because of the sale, or that you're committed to remaining in Italy for at least 5 years after the sale of the qualifying equity of interest. So what does that mean? So you're selling something, and from qualifying equity interests, it could be a company, it could be shares in something, whatever, shares in something, right? And what they don't want is that you're going to make a whole bunch of money, you become a tax resident of Italy, not your own home country, You're going to stay a tax resident for 1 year, flat tax, and then go back or go somewhere else. So you're just utilizing this for a year or two just to bypass taxes or a loophole in terms of not paying the capital gain on an exit from an investment, a company, whatever it is, a capital gain, right? But if you commit that you're going to be there for 5 years or more in Italy and you're going to pay the flat tax, you could be ruled that, hey, it's fine. In that first 5 years, you're selling an exit, an investment, shares, capital, whatever it is. It could be real estate, who knows? But you would be, that capital gain can fall into your flat tax um, fee every year for Italy without being exempt from it. So it is possible. But what they don't want is just somebody coming in for a year and then leaving. And then for that 1 year, because they sold, or that second year they sold and they made that capital gain, they're just paying a flat tax. And then they're going to move out of Italy and back to whatever jurisdiction, because they'll be like, oh, in that period of time, I was not a tax resident of that country. So I only ended up paying 100,000 euros or 200 or whatever it is in Italy at the time you've applied. So that they want to make sure people don't come here to avoid taxes, right? You don't want that. Of course, for any reason that may be needed, you can also cherry pick countries and assets that you wish to exclude from the flat tax and pay local taxes in Italy on them. Most people won't do that, but the possibility exists based on your specific needs, whether there's something regarding, who knows, family, estate, divorces, marriages, who knows. There could be a million reasons, or corporate obligations, or any ties to a country because maybe you've got some assets there, who knows. But you can cherry pick those as well to exclude them from a flat tax regime if you choose to. Of course, Italy has the 7% flat tax pensioner program as well, but that's outside the scope of this video, as that's specific for pension earning applicants, only pensions, and geographically restricted in Italy for towns of 10,000 or less. So little villages, so technically not Milan or anywhere else where most people want to go these days. To be eligible for this Italian tax regime, it is necessary to complete the option through the annual Italian tax return. It is advisable, of course, everyone should do an advance ruling to the Italian tax authorities to obtain their formal opinion in the application to be approved for this tax regime before you become a tax resident. Within 90 days, they respond to you. So that's pretty good. Keep in mind that you're expected to reside. So expected to reside in Italy as your full-time permanent residency. So that will be your main residency if you opt for the flat tax regime. If you're from a country where you still need to pay taxes, such as taxation by citizenship or citizenship-based taxation, similar to Americans, then you still need to apply for the double tax treaties. Interesting part is that you still need immigration status if you're actually going to reside in Italy, right? Full time. So you can come there 90 days and you're on a tourist visa. But if you want to stay there 6 months, 4 months, whatever, then you actually need immigration status. The tax residency doesn't give you immigration status. So watch our other video, just search Italy, INGWE Italy residency, and we can explain to you on how you can get immigration status with in Italy, which is different because technically you can't stay more than 3 months with an actual without actual immigration status. To be clear here, the tax residency is not immigration status. So just so you know, there are specific regulations and implications if you're director or shareholder of an overseas company, but of course each case is very unique, and with our tax partners you can customize the tax regime to make sure all your ducks are in order in case you're planning to exit your current country of citizenship or residency. If you're enjoying paying high taxes to your government and politicians, don't like this video or subscribe. But if you don't like paying high taxes, then maybe this video is for you and you should like and subscribe. Now let's cover the Greek flat tax regime. Okay, it's also called the non-dom tax regime. The Greece non-tax regime is a preferential tax treatment for foreigners who opt to establish their tax residency in Greece, according to the 5A law 4172 in 2013. In fact, well, it's called 2013, but it became into a law in December 12th, 2019. Okay. In order to qualify for the regime, the applicant should be able to show that he or she was not a Greek tax resident for 7 out of the past 8 years. You actually need to hold an asset or an investment increase to qualify for this tax regime. So, unlike the Italian one, the minimum investment is 500,000 euros. The object of the investment may be real estate, shares in legal entities based in Greece, bonds, or securities, but investment funds don't qualify. Okay. The main benefits and key points of the Greek non-dom tax regime are following. You flat annual 100,000 euros tax. Okay. And you might be like, hey, in Italy, I don't need to invest 500,000 euros. Well, I'm going to explain to you and do the calculations and you can figure it out. But wait a little bit. Okay. The Greek flat tax regime includes, you can include family members at an additional 20,000 euros per dependent. Minimal requirement is the 500,000 investment into Greek assets, possibility to complete the investment in the first 3 years. So it means that you don't have to invest immediately, but you guys show them the money. So we open a bank account, you put the money in there. So they need to see that it's in Greece, the 500,000. But you have 3 years to make that asset investment if you choose to, as part of the Greek non-dom tax regime. No obligation to file tax returns for foreign income. So it doesn't matter how much you make overseas, you don't need to report it. Flexibility to bring and use the foreign income in Greece without any changes to your tax regime, right? You pay a flat tax of 100,000. Doesn't matter if you make $0, $1, $1 billion, doesn't matter. 100, 5 million, doesn't matter. No inheritance or gift tax for assets outside of Greece as well. And the deadline to file the non-dom tax regime in Greece is March 31st of each year of that respective fiscal year, whereas supporting documentation can be filed within 2 months from the filing date. So that means you file and then they want some supporting documents. So you can file that within 2 months after that. But the original filing should be done before March 31st. The annual flat tax has to be paid as of July 31st of that year to qualify to become a flat tax regime applicant. Moreover, the non-dom tax regime can last up to 15 years, and you can exit at any time, no penalties, no exit taxes. The processing time to complete the whole thing can be anywhere from 60 to 90 days, depending on when you can invest or deposit the 500,000 euros in a Greek bank or invest in those assets before the March 31st. There's some KYC and paperwork, of course. You don't need to reside full-time in Greece or expected to reside there. And this is not an immigration status. However, you can combine the Greek non-dom tax regime minimum investment with a golden visa investment fund to give you permanent residency status in Greece. This basically means that if you invest in real estate, government bonds, or that bank deposit, you can qualify for both the golden visa, which gives you the immigration status, but you don't even need to stay in the country. There's no residency requirements. And also file concurrently with that same investment or deposit for the non-dom tax regime of Greece, which has no expectations at all for you to live there in Greece. Now, what's changing for both the Italian tax regime and the Greek non-dom tax regime in 2026? Italy is increasing it to 300,000 euros from 200,000 euros flat tax, and dependents to 50,000 per dependent instead of the 25,000. Okay. What's their logic? What's the Italian government's logic? High income earners can afford it, so it won't really affect them if they're paying 200,000, 300,000, 100,000, or maybe in the future 400,000. And since the Italian government needs more money, like every other government in the world, they're increasing it in 2026 from 200 to 300,000 for the main applicant as your flat tax for your global income, no matter how much you make. Another logic they use is to increase the flat tax fee is that no investment is required to maintain or be eligible for this flat tax, unlike Greece. So they consider this as a bonus and figure that stays competitive, right? Well, we're going to dive into that and let's figure that out. Anyone applying now for Italy's flat tax regime can still lock in the 200,000 euro current flat tax and lower dependent fee for the next 15 years before the 2026 government changes come into play. This program has been very popular with UK expats and other nationalities, and even with the flat tax increase, the program remains competitive to the percentage-based taxation system on income that 99% of the world is using, which is not at all beneficial for investment bankers, hedge fund managers, C-level earners, equity or crypto traders and so on, right? If you're paying percentage and you're making more money, you're shouldering a big amount of that percentage, right, of paying more, but you're not getting more services back from the government. And again, that's a whole political thing. But if you don't want to pay high percentages or progressive percentages on your income tax or capital gain and all that sort of stuff, well, these flat tax regimes are good for you. In Greece, the government is making it more flexible and considering adding investment funds to qualify for the non-tax regime. Since right now only 500,000 euro investment in real estate bonds or deposits or specific legal entities or securities or shares qualify, the government wants to expand it to include investment funds like the Alpha Fund Investment Fund or the Eurobank Investment Fund, which also qualifies for the Golden Visa program. So this can streamline the applicant's investment. So if anyone doesn't want to do real estate in Greece, because it is overpriced, if you didn't know, and allow them to apply both for the Golden Visa residency and the non-dom tax regime with one investment, this will become even flexible. But if you don't mind investing in the bonds or deposits or specific company shares or securities or the real estate, then you can combine 500,000 euros and get both done with one shot investment. Remember, the non-dom tax regime in Greece doesn't expect you to do the investment in the first 3 years. You just have to show the money in the bank account. But you might as well, if you're doing the Golden Visa and everything, just do 500,000 that qualifies and you get both. Why not? Let's do a head-to-head now. Key criteria: Italy, Greece, 2026. Max time allowed for this program, 15 years Italy, 15 years Greece. Both you can exit when you need to without a penalty. Flat tax amount per year, 300,000 euros Italy in 2026. It's 200,000 in 2025, but it will be 300,000. But Greece has remained at 100,000 euros. So that's huge. And flat tax amount per year per dependent. In Italy, it's increasing to 50,000, but in Greece, it's still going to be 20,000 in 2026. So, and this is where we're going to calculate. Okay, you're saying that in Greece, you got to put 500,000 euros investment to qualify, so it's a waste of money and it'll cost me more. But you're paying 200,000 euros more in Italy. Okay, so let's see, 200,000 euros more. But Greece, all they want is that you invest in an asset or do a deposit of 500,000 euros. That's like, what is that, 40% or something, right? So can you make 40% on 500,000 euros? Well, if you can, kudos to you. You can just go to Italy and do the 300,000. But if you do the numbers, just having a 500,000 euro, I don't know, who knows, a bond, a security, a deposit, or just cash in the account, or even real estate or whatever, is not going to make a difference of 200,000 euros for you in terms of cost per year. So even if you pay Greece 100,000 euros a year and you're making go, and you only have 500,000 sitting in your bank account in Greece, it's still more viable than the Italians charging 300. Okay, in terms of lifestyles and country, no argument. Everyone has their own preference. Both countries are beautiful, lovely cultures. But in terms of just a numbers game, a flat tax regime in Greece sounds more feasible. Okay, and if somebody doesn't have 500,000 euros to put in Greece, then I highly doubt they'll have the income to even bother thinking about a flat tax regime. Requirement to make the country your main residency: Italy, yes. Greece, no. Investment is mandatory to qualify: Italy, no. Greece, yes. When should the investment be done? Italy, there's no investment. But in Greece, within 3 years of the filing and approval of the non-dom flat tax regime. Processing time, they're both about 90 days. Italy has to give you a decision within 90 days. Greece, it depends on the KYC, bank account, and all that. But it depends. It can be 60 days, 90 days, 120 days, worst case. Depends how slow you are, not me. Are these the best flat tax regimes possible anywhere in the world? Well, definitely not, since we have not covered Malta and other jurisdictions, but we'll cover those in our future videos. Remember, this should not be considered as legal or tax advice, but rather general guidelines and information on flat tax regimes around the world and policy changes and so forth. And make sure you're connected with a specialist in your home jurisdiction for tax advice before you go out. And of course, we'll connect you with our partners around the world for wherever you're planning to go. That part we can take care of. If you're searching for international investment hacks, creative residency and citizenship solutions to keep more money in your own pocket than paying governments so politicians can blow it up for you in whatever way they spend their money, well, that's where we provide key analysis and the exposed truth about programs, policies, and updates around the world. And you can subscribe to our YouTube channel because it's free. If you're tired of taxes or just see no point in paying 30, 40, 50% or more on your personal income or capital gain, it's time to think outside of your borders. At INGWE, we've dedicated crafting solutions that meet specific residencies, citizenship, and we've got upfront processes, milestones, and peace of mind with transparency, choice, and security. We've got comprehensive insurance, client trust accounts with the North American banking institutions, and of course, we've got a multilingual team where we help clients from 55 different countries. Ready to take the next step? Fill out a 60-second intake form, and we'd be happy to get on a call if you qualify for any of the programs or services that we have to offer. Of course, you can always book a one-on-one consultation with me as well. Let's get into the questions and answers of our audience members. And again, any program that we've covered or are covering, we'd be happy to answer on our live stream. Aquile Baeza 69 says, "Hi, sir. What do you foresee for the Canadian Startup Visa program? Do you think this program is over? What do you think the most possible scenario is?" Follow-up question. If my sister-in-law is living in Greece, does it happen any other stream, any other visas to PR? Not really. I mean, it won't help anyone else. Like for her, it's great, but for you, it doesn't matter. You still need to go through the programs. In terms of the startup visa, Aquile Baeza 69, we will see in the next few days what will happen. Probably in the next 7 to 8 days, expect a big announcement. It's very premature to make a lot of predictions. We've already made a lot of predictions and forecasts over the last month on our YouTube channel, but we'll just watch and see what the government is going to announce. Could be next 24 hours, could be next week, this week. Rosita says, "Hello, Reza June." Hello back, Rosita. Thanks for joining us. Okiemute Akpovoka. "Hi, Reza. How do I contact you? I reside in PEI, Prince Edward Island." Okay. Just send us a message on our contact us page on our website. Mention what you're looking for, and if it's within our scope of services, we'd be happy to help. But keep in mind that we are not doing skilled immigration. We're not doing any PNPs, and we're not doing any study or visitor visas. That's not what we do. SK9999Y3K. Wow, cool name. Do we have to submit background checks every time we renew? For Italy's golden visa, after 2 years, we can sell and still be able to have the residency. Okay, we're talking about the Italian golden visa, the investor visa, right? Good question, SK99999Y3K. Very nice. So in order to maintain the investor visa, you should hold the investment. It is possible, technically, okay, to sell it after the first renewal of 2 years. But according to the law, you should hold the investment. But technically, you could get rid of it, but we don't recommend that unless you're converting your status. So you could convert your status after the first second year renewal to something that's a non-investment option. And again, go into our YouTube channel, search Italy, and you'll see the non-investment routes as well. So it's possible. Would we recommend it? No. But are there other alternative solutions to converting your status to another type of residency, which doesn't require you to hold the investment? Yes. And of course, you would have to, you can reach out to us and we can always let you know what is required for the renewals as well. But keep that in mind. But great question, SK9999Y3K, for the Italian investor visa. And again, folks, if you like taxes, if you like to pay high taxes, and if you don't want to do any fast track residency citizenship, make sure you don't like this video and you don't subscribe. But if you don't like to pay high taxes and you do like fast track residencies, options, citizenship solutions, then maybe you can press like, maybe you'll do a subscription because it's free. If there's no more questions, we'll be back next week. And again, folks, we're covering Malta residency. We're talking about Cyprus, Greece, Portugal, EB5, Panama. We've got a whole bunch of new videos and content out because there's going to be a lot of announcements. And of course, if there is something announced by the Canadian Startup Visa about the Canadian Startup Visa program, we will announce that as well and do an analysis. And of course, Greece and Italy are going to be doing some updates in the new year on their flat tax regimes. And there's other tax optimized jurisdictions who may not have a flat tax, but might be more feasible than a flat tax. Hey, Reza, Ash H8F. Hey, Reza, please share some of your predictions regarding SUV update. It's a good question. I've done it a couple of videos ago. It's not a prediction. It's like, what are the options that the IRCC will do for startup visa? It could be that they pause intake, right, indefinitely or for a certain couple of years. That would be logical, but IRCC is not very logical. 2 is they may change eligibility to sort of have less applicants applying. And it could be eligibility of the main applicant, it could be eligibility of the startup to qualify. Maybe like the US, like you'd have to have this much revenue, this much actual investment, tangible investment that's invested in your company through one of the entities already, right? But then there's some realistic options. So they may retroactively apply the 2024 April ministerial instruction back all the way for the past few years and cancel a lot of the startups that were endorsed beyond the cap of 10 startups that each designated organization can endorse. So they can go back to 2022, 3, 4, and say, okay, the first 10 startups that you did great, retroactively we're applying the policy that we issued ministerial instructions in April 2024. Legally, they can do that. Whether they will, we don't know. But these are options. Bill C-12 is, I guess, not approved yet. So everyone is worried about that because they can just cancel everything. There's some predictions out there that they will cancel everything, right? Like SUV, all of them. But it doesn't sit right with me that they would do that. They'll do something crazy, something unexpected. But right now, I would say those are the options that'll happen. They could also do nothing, which is even worse because the startup visa right now, the processing time, what is that, like 75, 85 years? I did an AI calculation in one of my videos. It was about 180 years. If they go with the low target, not the medium target. But again, a lot of people didn't like what I said on those videos, but what can I do? All I'm doing is just showing you what the government is showing in their stats. I'm not making stuff up. I'm doing simulations. This is not fact. This is simulations. This is forecast. This is processing and analyzing hypothesis, right? Obviously, 180 years, I don't think Canada will remain Canada. Maybe maybe some other country will take over. Who knows when? Because we'll be paying more taxes or interest to our bondholders who hold the bonds for our national debt than we do on national defense. So yeah, in 180 years, I'm not surprised if Canada is not considered Canada anymore. Anyways, don't quote me. If I ever run for office, make sure you don't reveal or expose this video. Anyways, folks, if you don't have any other questions, I'll be back next Thursday. And as we're nearing the end of the year, we gotta stay tuned into announcements around the world on government changes, new programs, scams, misinformation, and all that. Okay, so hopefully the people in the background, the shadows who have not commented, Thank you for joining us today. And the people who were on the show: Aquila Baeza 69, Rosita Okiemetu Mute Povoka. Yeah, I got to work on my pronunciation there. SK9999Y3K, and of course Ash8HF. You guys got to come up with some easier names or handle names for me to pronounce, man. I'm not an expert in these languages. Anyways, great seeing everyone. See you next week. And thanks for the likes. We'll see you soon, folks. Tax residency and citizenship solutions. That's the key. Okay. If you don't have it, we don't believe in it. Take care, folks. See you next week. Bye-bye.